Well, first of all, thanks everyone for joining. Thanks for your patience. We obviously have to do a little bit of a housekeeping and make sure that we introduce everyone. And I'll tell you. So about 25 years ago, I was telling many of you this. My mom decided that she wanted to go from working nights as a medical technologist to becoming an insurance agent. Self-funds her first purchase of a business, then decides that 18 months later she wants to acquire another insurance agency and merge it all into one. Well, why I share that with you is very similar to the type of story that you're going to hear from Carrie today. It really resonated with me. Hearing Carrie's story really resonated with me because she very similarly decides to make this huge leap of faith from working as an engineer or
sure, yeah.
Oil and gas. Okay, well, she was working in oil and gas, decides, I want to make sure I'm mindful of, okay. So she decides to go from oil and gas into venture capitalism of all things, right? Huge leap of faith, big, bold moves, and really that's, in preparing for this particular conversation, the three words that really stood out to me and jumped out at me: bold, tenacious, aspirational. And what I want everyone to take away from our conversation today is her ability to be able to see opportunities that others may have overlooked, her ability and willingness to see the gap in the market and go where there are perhaps underserved markets, and for her to be able to serve those particular markets. And that's obviously in keeping with our servant leadership aspect of this particular organization. So without a further ado, Carrie Colbert with Curate Capital, everyone.
And it's so nice to be here with you today. There are some familiar faces in the room that I've known for, we'll age ourselves here and say 20 plus years, and then there are so many lovely new faces. So I'm honored to be here, so thanks for having me.
Fantastic. Well, Carrie, again, we can spend an entire hour on your origin story and still not scratch the surface. But why don't you, with the audience, share a brief background on what were you doing before Curate? And I'll tell you, it takes a tremendous amount of leap of faith for someone to jump from that into venture capital. Was this something that was just a small voice that was just constantly whispering in your head, or was there something that there was some sort of a defining moment that just finally said, you know what, I just got to do this.
Sure.
This is the path that I want to pursue.
Sure. Well, I wish I could say it was some big master plan, but really all my early decisions were just very practical and pragmatic in nature. I grew up in the Texas Panhandle, pretty rough upbringing, and I knew that education and professional success were kind of the pathway out of that. And so, my family didn't have any money to pay for college, and so what I studied was dictated on where I got the best scholarships, and that was petroleum engineering at UT. And then I graduated the top of my class, and so where did I move? Well, where the best jobs were, here in Houston. And so, long story short, I had a very great, almost 20-year career in that industry, but frankly, I was never super passionate about the industry. However, a big turning point for me is that I spent most of that career working, that's all right, working at Hillcorp. Jeff Hildebrand, I worked for him, and that company is and was run in such an entrepreneurial manner. Right. And so I was fortunate to be there from the early days. We had maybe around 100 employees at the time, less than 100 million in value. Yeah. So certainly not a startup, but compared to where they are now. And so then when I, was there over a dozen plus years, we scaled to over 9 billion in value, thousands of employees. But part of that entrepreneurial culture was having ownership in the company. And so all of us had some level, but then we could also invest our own money in the company. And so it becomes very compelling to stay there. And so really people don't walk away, except at the time, a lot of my friends and contemporaries were leaving and starting their own oil and gas company. Yeah. I think a lot of us like the smaller entrepreneurial environment. And I really was very close to starting an oil and gas company with my colleagues. But at the end of the day, I wasn't passionate about that. And I had been there and done that. And I was like, I don't know what I'm going to do next, but I'm going to bet on myself. And I want it to be something entrepreneurial and something that I'm passionate about. So I actually just walked away and did not know what I was going to do next. It wasn't some big master plan of starting a venture capital fund, but I kind of stumbled into that, which we can talk about a little bit.
Yeah. And no, I mean, again, that in itself is some sort of a driving force that, of course, kind of laid that foundation for you to be able to not just take the risk, but also, you're set up for success. I mean, we'll get into the fundraising aspect of it as we dive deeper into the conversation. But again, just being able to see the gap. Right, three different components come into play here.
Yeah.
The CPG brand, only wanting to work with CPG brands. I'm not sure if that was something that immediately jumped out at you. And then also, I only want to work with women-led and women-owned businesses. Right? What was that gap that you saw in the marketplace where you said this is an underserved market that I really want to focus on?
Yeah. Well, so I'll take you down the meandering path. I left off where I just kind of walked away from Hillcorp. Well, so at the time, single, high corporate income, Instagram launched, and I was on Instagram the week it launched because I was doing fun things. I was traveling a lot. I liked taking pretty pictures. There was no algorithm that you had to worry about. There weren't videos and reels and all that. You could just post pretty pictures.
Yeah.
In fact, if any of you were on it in the early days, there was a popular page on Instagram. It wasn't like the Explore page. I was on the popular page a lot on Instagram. It was kind of a big deal back in the day. Not really. But I only say that because it really played a role into what I'm doing now. So I was on Instagram the week it launched. My personal handle is just @CarrieC, very short because I was there early. But I mentioned that because it was very fortuitous. So I grew a decent sized following when it was easy to grow. And this is in the early days of influencer marketing. So I started doing these paid brand deals. So, I was sitting on a lot of liquidity from Hillcorp, and I'm like, I need to reinvest this somewhere. And so I would just very naively ask brands if I liked it, if I liked their product, if I liked the leadership. I would just say, hey, if you're looking for any investors, I'd love to talk, or if you're looking for any board members or something. And so I very naively started investing. And thankfully for my investors, now I learned on my own dime, or at least learned quite a few things. I didn't learn everything, but learned on my own dime. And so really I did that for about 5 years and learned 3 important things, right? One, I was having great fun, and I wouldn't have used the word fun to describe my career before. It was good and it was fulfilling in many ways, but not fun. But investing in these companies, I really was enjoying my work. And then number 2, I saw the great results that with the infusion of capital, along with some mentorship and advising, these companies were really scaling quickly. And then most importantly, probably for my next step, was the great opportunity set. And what do I mean by that? Well, I, as one individual, was getting so much deal flow. I knew it was way more than I could, handle myself. And so that's when I took the next, kind of leap and said, let's start a venture capital fund. That'll be fun, right? And so I did that based on all the deal flow I had and the data that I observed in the market. And so that data, to be specific, is that women still get less than 2% of venture capital dollars in the US. It's 1.8%, it's actually trending down. But as I surveyed the landscape, all the female-founded or female-focused venture funds all kind of had the same tone. And this isn't a criticism, but as an outsider to the industry, it just struck me. They are all pretty vocal and like, this is bad, that woe is, me, woe is, it was all very agenda driven and political almost in nature. And that's fine. And there's certainly work for, room for activism work and all that. But as I looked at the data, there's also all sorts of reports and studies that show that women-run businesses are actually over-delivering on the results, specifically in the CPG space. Another stat that caught my attention is that women control over 80% of household spending. And so when you say, okay, women control household spending, we have a firmly rooted belief that they're developing the products, services, and technology they wish existed, and they're underfunded. To me, that just created an incredible business opportunity, right? I think of it as an arbitrage opportunity, in fact, right? Like, because of the great relationships I have in that space and the deal flow I was receiving, we can negotiate really good equity positions, kind of better than market, if you will, and really help these companies grow and scale and ultimately exit.
Absolutely, and we're going to start looking at the nuts and bolts of that at Curate Capital, particularly when it comes to equity control, right? And what that represents, and what that allows for you as an investor to be able to go in and perhaps make changes or help them essentially grow into new markets, right? So before we get into that, let's think about the fundraising element of this. Because that, I think, is probably it's unique, but then also it would make a lot of us think if we were essentially pursuing the same path, well, who's going to trust me with this excess amount of capital, and when am I going to see the return of this, right? So there's a trust and credibility involved in being able to raise that capital for you to then be able to deploy it at various target companies.
Yep.
So what did that look like, and how were you able to essentially provide this level of credibility for yourself and create this sort of a following from an investor standpoint to say, you know what, Curate Capital is doing something unique here, and we certainly feel that this is going to bring us a significant level of return. And I'll add to this. You said that you, during our preparation, you mentioned you raised $15 million, and it was 50% over what you had targeted.
Yeah.
Just that alone in a fund one is probably, again, a great accomplishment. So you're certainly going to have to share with us in terms of, how were you able to accomplish that?
Well, thank you. I will say that fundraising was the aspect of this job I was least comfortable with. I had never been in a fundraising or even sales role before, and that just wasn't my MO, right? Like I'm an engineer, and have my MBA as well, so I'd worked on both sides of the business, and I had done investor relations for Hillcorp, but telling someone else's story and selling someone else's company is one thing, but selling yourself, especially as a first-time fund manager, that was really uncomfortable, and so I did not know much about fundraising, and being an outsider to an industry, though, I think can be a strategic advantage because you can question the status quo because you're just kind of ignorant of some of the status quo. Certainly, I took some time to learn the conventional wisdom, but being an outsider allowed me to say, yeah, I see why that's there, and adopt what was worth adopting, but some of the things I could challenge and be like, well, why don't we look at that a little differently?
100% agree. I mean, and by the way, that is quite admirable for you to be able to challenge the status quo in an environment where it may very well be that all they want to do is hold on to what's been working.
Yeah.
Why fix it if it ain't broke?
Yeah.
Tends to be that sort of a mentality, right?
Well, and so when I came into the space and was looking at starting a fund, I personally I like very colorful things, as you might gather from just a few pictures here. And I was surveying the VC landscape, and this was just maybe 5-6 years ago. And if you were to go to any VC's website, they all looked and felt the same. It was like navy blue or like a dark gray. No shame here, no shade, I should say. Very serious, serif fonts. So as I started saying that, I'm like looking.
Failure on my part.
It's all good. It's all good. So they all kind of looked and felt the same. And in fact, they even had the same verbiage. We are a value-add investor. We help our companies grow by X. Like, it was all the same. I'm like, oh, come on, let's do something different. And so being outside allowed me to do that. So then I kind of splashed onto the scene with this like hot pink branding and green and all this stuff. And like, who is this girl, right? And so it certainly caught some attention. Yeah. But so back to the fundraising thing. So as y'all may know, your legal documents give you a certain amount of time to fundraise, and we had 12 months. And fundraising was hard. Like I had in my mind that it was going to go one way. First of all, I thought, well, we'll start a small fund because small will be easier to raise. So we'll just raise, 10 million, and I'm going to go out to so-and-so, Jeff and Bob and Bill from my oil and gas days, and they've known me for 20 years. Like he's going to give me $1 million, he's going to give me $500,000, and we're just going to raise this real quickly. Well, that's not what happened. I did have, a lot of people that had known me for ages that did, and I'm so super, appreciative for their support. Really, some great mentors and just people I've looked up to for years. I'm very honored that they entrusted me with their resources. But really, that wasn't the path to success. And so for the first 11 months of fundraising, I had only raised $7 million. And I'm like, oh my gosh, I'm not going to meet my goal. Like I'm, crying and on the closet floor at night going, what are we going to do? I'm not going to meet my goal, and this is not really the way I'm used to operating, and so really I had to rethink some things. And so what I started doing a little bit differently was who I was targeting and how I was targeting them. And what I mean by that is, so I had this built-in social media following of 90,000 or something at the time, and it was like, okay, well, I'm just going to start talking about what I'm doing. And I don't mean like putting a hard sell on people because the SEC says I can't do that, right? Like I can't openly solicit. But what I found was as I just talked about what I was doing, why I was doing it, how I was doing, what it meant, who can invest in venture capital? How does venture capital work? As I started breaking down those barriers to understanding the asset class and understanding investing in general, I just had so many people reach out and said, I want to be a part of this. Or maybe they resonated with a particular brand, a portfolio company. Like, I'm wearing a portfolio company. I have to give a little shout out. This is Francis Valentine. We've always got to support our brands. And so people say, oh my gosh, I love Francis Valentine. You're telling me if I invest with you, I can own a piece of Francis Valentine? I'm like, yes, indeed. And so just kind of talking about things organically really brought a lot of traction. And then the other thing that took us over the edge was, this is kind of a funny story, bear with me. But so as I was investing, I saw that founders were excited to have me on their cap table, and I'm not even that big of a deal on the internet, right? Like, I'm a little bit of an influencer, but not that big of a deal. So as I was fundraising, it was always in the back of my mind, like, how do I get this at scale? And so I had a few influencer friends who invested with me, but the turning point really came when a whole influencer management company, that's actually based here across the street, they reached out and said, Carrie, could we partner with you? Because what's happening is these influencers are making incredible money, more money than they know what to do with. You guys would be shocked if I told you how much. I thought I understood. I did not. And he said, they get hit up to invest all the time, but they don't really know how to do due diligence or figure out if it's a good investment. So what if we invest with you? You can take our capital and then we can help your companies grow. And so that's really the turning point. So like I was saying, over the first 11 months, we raised $7 million. And then the next 60 days, we brought in $8 million. And so we ultimately closed at 15 million. And it was really that turning point, the influencers and just other women who reached out and wanted to support. So at the end of the day, over 80% of our investor base is women, which is really unheard of in this world. And so that was a cool component. We're not exclusionary by any means. We are not like hating on anyone. In fact, I think better together. We want all sorts of thoughts and opinions on the table for sure. But so now I'm in market raising our second fund with a much higher target. So bear with me. I'm in that uncomfortable phase of fundraising again. So that's where we are now. But hopefully good things are coming.
Clarity in your story is what I'm hearing. Being able to tell the why behind the brand is a big component. And of course, when you're going out there raising capital, is certainly even more critical for you to be able to share that sort of a deep grounded purpose, right? So let's take that and connect it to this piece of CPG brands. Why CPG brands?
Right. So that goes back to our belief that women are really creating the products, services, and technology they wish existed for themselves, their families, their home, and their lives in general, right? And when you tie that into the fact that women control so much of household spending, and you tie that to the fact that women are so underfunded, it really creates, that arbitrage opportunity for us to come in. And so where we usually come in is late seed or early A. So many times those founders have maybe cobbled together a lot of friends and family money, or they bootstrapped to date, where we're coming in as their first kind of big check. And of course, it's all relative, but we're really coming in to bear with a lot of resources that we've kind of created for them, the influencers who can help promote their products, along with a lot of other things, and really kind of helping them level up their games in terms of the governance and the strategy and the direction of the company to the next level.
Absolutely, yeah. That level of structure that perhaps an early stage founder, maybe they have a proof of concept. Maybe they've proven that in the market, right? They've got that product market fit. However, once they've got to a certain stage, things seem a bit out of control. And very similarly, the capital might be out of control as well, right?
That's right.
Now they're saying, okay, well, look, how am I going to grow another $5-6 million in revenue when I don't have, or I barely have anything in the bank to be able to pay my, pay my vendors or pay my employees, whatever that looks like.
Yeah.
So let's talk about that a little bit. Once you have actually found a target company, and first of all, let's figure out, okay, what is a great target company look like for you to be able to say, I really do want to invest in this company, right? Obviously, being a CPG brand, women-led CPG brand. But what attributes does that particular founder even need to have in order for you to feel very confident that this is going to be an investment well spent?
Yeah, great question. I think it goes back to the whole reason I started Curate Capital was because I was getting such incredible deal flow. And so, I think we punch above our weight, so to speak, in terms of our reputation and our deal flow. So we're getting over 200 inbound pitches a month from companies reaching out. Wow. And so we've got both quantity and quality of deal flow. So, that's not been an issue. We get to really high grade and pick and choose. And, we've invested in a few that have been on Shark Tank. Wow. This company, it's Kate Spade and her best friend started this. They started and grew the Kate Spade brand, sold it, and then wanted to get back in the game and started Frances Valentine. And so it's really awesome. I mean, we get to just work with a spectrum of founders from maybe the 20-something who it's her first time doing this to, Elise, who runs Frances Valentine. She's 60 and has, grown a $1 billion fashion brand before. And so it's really a spectrum. So as you pointed out, or kind of led me into, really it's the character of the person that can be some of the wild cards that we're dealing with in these situations, right? Because ultimately we are coming as minority investors. That's the way venture capital works. And so that's why, when we're coming in, we're making sure that they bulk up their governance, that we form a board and do all of those sorts of things, because ultimately we're not controlling the shots, but we want to at least influence the shots. Now, in terms of what sort of metrics we're looking for, we're wanting to come in where they've got product market fit, so they're revenue generating, typically north of 3 million or so, where it's big but not too big, right? Where we can still craft out a good piece of equity for ourselves. But really, this comes from me being an outsider. When I came into the space, I was a little confused and scratching my head about how much people wore it as a badge of honor, how much capital they raised. Yeah. I'm like, wait, that's not the name of this game, right? The name of this game is to build a company that's ultimately successful, that's profitable, and is a going concern. But so many people are like, well, oh, they've raised 20 million or they've raised 30 million and all this. Like, no, that's not the name of the game. So I actually have a preference towards companies that have taken as far as they can on a bootstrap basis or raised as little money as possible to get them to that point where capital can be used efficiently. So we're not coming in helping build from scratch. We don't want our capital used as a Band-Aid to mask underlying issues, but rather when they're really ready to scale and take it to the next level.
Right. Because, again, those founders may have gotten lucky, or just their initial sort of drive and grit was able to kind of get them over that initial hurdle, but still need to be refined as a leader, someone that's actually driving that ship forward. So do you encourage them, or do you provide them with resources to be able to, or even in your terms, to say, look, as this moves forward, join an organization like EO or Vistage or things of that nature?
Certainly. Yeah. So we actually do some psychometric testing in the due diligence process, all sorts of kind of ringers we put them through to kind of make sure that it's a good fit culturally. But yeah, you're right. So then we've built out this whole Curate Council that is kind of vetted and trusted industry experts and resources that have agreed to be those sorts of advisors and mentors. So it's not just coming to me all the time. All that's great, and I'm texting with multiple founders a day all the time. But we've got a network beyond just me and my team internally that are available to help these founders as they mature. Because I found that one thing, particularly in the female founder space, is that it can be very isolating. They've got their team that works for them, but they can't go to their team with their problems. But everyone is kind of trying to reinvent the wheel, whereas we've already invested in 16 companies. We'll probably invest in 50 in the next fund. So we're seeing things across, sector lines and across different types of companies. And so we're able to really connect them with one another as well.
Tons of shared
to share those learnings.
Yeah, absolutely. And owner isolation tends to be a huge one.
It is, right?
So as we get to the tail end of this, define influential investing.
Yeah, so influential investing is this concept that we pioneered that allows us to leverage the resources of influencers, so their capital, they're a great source of capital, but then also their services to help our company just grow. And so it's been a bit of a work in progress because there's some complications with how you structure it legally and financially. But with our first fund, we raised, almost a third of the fund from influencers. So there was this key group, kind of our pilot program of about a dozen influencers who invested, $4 or $5 million of their personal money with us. And I was a little naive. From my Hillcorp days, one of our values was alignment of incentives. When Hillcorp wins, we all win, we would say. And it was really true, and I saw the power of that. So I thought that just having the influencers investing, that they would automatically post and support our brands. And That's happened some, but they've got so many paid gigs on their calendar and all that. I was like, okay, we've got to rework this. So for Fund 2, we've actually created a mechanism where they actually get to benefit in the carry of the fund alongside me. So think of it as extra ownership for them.
Got it.
For performing their services. So they get to kind of earn extra ownership. And it's been really well received because really in the, not to get off on a tangent about the influencer world and the creator economy, but many of them are getting tired of the day-to-day hustle of posting every day and all that. And so they're looking to diversify their investments and their revenue streams for down the road. And so also they've really seen how some of these brands, consumer brands particularly, have leaned into influencer marketing. And certainly they've got paid their 20 grand for a campaign here or there, but they've seen these companies ultimately have these exits, and we're left wondering, wow, what if I would have had 1% of that company or 0.5%? That would have been worth X versus just this. And so that's really the touch point that they understand. They don't have to be experts on venture capital or startups or anything, but they've had enough of those touch points to understand that. And so that's really what they were coming to us with, like, hey, and then many of them have tried investing and they've lost all their money because if you're just getting a few, looks at deals, you don't know what's going to be good or bad. And so anyway, it's a powerful concept for those very entrepreneurially thinking influencers who want to get into investments and want to diversify their kind of financial future away from having to post every single day on the internet.
Wonderful.
Yeah.
Well, look, let's close out this conversation with, so many of us, when we think about big, bold moves like yours, audacious goals, there's a proclivity for many of us to become paralyzed under that fear of, oh my goodness, this is way too big for us to accomplish. This mountain climb is just going to be impossible. What do you what recommendation or what would you suggest? What message do you have for people in the audience to kind of get past that and take that leap of faith, very similar to you?
Yeah, I think it's so easy for those of us, particularly that are maybe analytical in nature. I'm engineer and
Analysis
MBA
paralysis,
type.
right?
Exactly. That we can overthink it, and we can also get our own way, so to speak. And so I think in some cases, it's good that we don't count all the costs up front. Like, frankly, it's been a season of personal sacrifice for me. And if I would have known how much, maybe I wouldn't have done it. But I think sometimes it's good to take those leaps and just know that we can figure it all out. Now, I'm not urging everyone to throw caution to the wind and take dumb leaps, but some leaps are worth it, right? And so certainly, I went from a high-paying corporate job to, startup life myself, right? Like, I'm more like our founders than some big corporate VC. But it's worth it because I'm enjoying the work I'm doing. The investments are doing well. We're succeeding with our thesis and our mission. Right. And so it's all worth it. But some things I didn't recognize how long, how much time, or how much money it would take to do what I'm doing. But I'm still ultimately quite thankful and grateful to be where I am.
That's a good point. Well, Carrie, thank you so much. Tell everyone how can we connect with you? Where do we find you?
Sure. On Instagram, I'm just at Carrie C, or our company Instagram is at curate.capital, and that's also our website. And of course, you've got my contact info. Yeah. Feel free to share with anyone, and I'd be delighted to stay in touch. And thanks for having me today.
Absolutely. And we'll open it up to the audience for a quick Q&A. How much time do we have? I don't know why. 15 minutes? All right, fantastic. So,
can I follow up on where you were just leaving?
Yeah, sure. Absolutely. Please.
Because I find it interesting. I'm going to tie your mom in, sorry. But you opened up with, the taking the leap, the guest who's taking the leap. I have a daughter who's taking the leap. You're all three women. For some reason, I see a pattern here that, and I don't know if it's because you feel like there's a ceiling or what it is, but there seems to be, despite what most people would say is kind of the culture. My daughter's thing is leap and the net will appear. Okay? So she's done it twice. So far it's working well. So just an observation. I don't know what it all ties to, but following up with capital, amazing.
Thank you. Thanks.
You said your focus was CPG. Is there a segment within CPG you feel is, an easy win or proven over and over again to be a good part of CPG, and on the flip side, one that's like, it's too saturated, too much in the market.
Yep. I think health and wellness, particularly, in the femtech space, is very, hot right now and very relevant to what we're doing. Beauty's a great space to be in. The multiples are really high in that category. Obviously, we're in fashion apparel. And I always say food and beverage, too. I think that's very challenging, very capital intensive, very hard to get shelf space, all that stuff. So we say we're in that. I found that to be very challenging, and so I'm not super gung-ho on that for the next fund. I think we'll see a big focus on beauty, health and wellness predominantly. We're also open to anything with pet, home, children, because it's all related. And so I guess I'll end that by saying that it's more on a case-by-case basis, right? But outside of CPG, just because I didn't mention this earlier, I'll say that we leave ourselves open to other extraordinary solutions that women are building for other women. And I'll give one example because it's a great one. It's based here in Houston. This was actually the first investment we made out of Fund 1, and it's a company called Intuitap. And they have created essentially a stud finder for the spine to make getting epidurals easier.
Wow.
When you're giving, I'm looking at Elizabeth back there.
Wow.
I don't know that it'll be ready. We're FDA approved. You should ask your OBGYN. We're FDA approved.
It's beyond the research phase.
Yeah, and
Wow.
we're going to market and trying to sell
Wow.
the company soon. But it's really genius. And what I love about that is it just proves it doesn't have to be rocket science, right? It's not like AI or something like crazy. It was just a problem that hadn't been iterated on. It was a problem that hadn't been addressed in decades. And so, as some of you people, ladies in particular, may know that it's still like an anesthesiologist tapping on your spine and feeling and doing it. That was the worst part of giving birth, I gotta say. And now that basically takes the average number of needle insertions from almost 3 down to 1. I mean, it's really error-proof. And it's just a little scanning device. It's cheap, it's disposable, and it makes getting epidurals easier. So I'm certainly no medical.
Yeah.
That too. And it's not just epidurals, it's any spinal puncture, but obviously
reduces the risk of that procedure.
And so the way I think of those is, she didn't need any medical expertise. She has, Medtronics, Baylor Medicine, UT, Health. She's got all those, medical people around her. She needs someone to help with go-to-market, and she wanted, women investors, and she wanted the influencers who could ultimately talk about this online once we got FDA approval and all that. And so, she's based here. It's a wonderful company. And great story actually about the medical center. She was actually brought in by the medical center to start their innovation whatever the program's called, I'm not getting it right now, and she was tasked, she was given a quarter of a year to just go around and just look around at different inefficiencies in the medical center and then rank them according to patient impact and commercial impact. And so they had 400, 500 ideas of things that needed to be addressed. Wow. And ultimately this rose to the top.
TMC Innovation Factory is what's coming to mind.
That's something like that,
Joe?
Hi, Carrie.
Hey.
Great presentation.
Oh, thank you.
So much. I want to be like you. I come across a lot of women-owned, minority-owned business owners in my line of work. And I've always thought, if they just had that next kick to get them over that hump. When that happens, do people reach out to you, or how does that process work?
Yeah, certainly.
Oh, you got Dr. Carrie.
Yeah, people can submit their pitches on our website. But even if we're not a good investment fit, we've developed this whole founder kind of toolkit and founder community where we can share resources with other founders. Because I always tell people, it's like all these stars have to align to make an investment happen. So just because I like your company doesn't mean we're going to be able to invest, right? It has to be the right stage, the right category, the right revenue size, the right, this, that, and the other. When an investment actually happens, it's kind of miraculous, right? Yeah. Because the timing and everything had to work together to make it happen. But that doesn't mean that there's not a broader community of founders that we want to serve and help along their journey.
Right. And I mean, again, I genuinely feel like we only scratched the surface. I mean, we can just bring you back in here for a very detailed conversation around just the pitch element alone, because again, for many of us, we see the VC world and we're thinking Shark Tank. So I'd be curious to know what that pitch sort of a process looks like. Are they sending you, because you're an influential investor, are they sending you just 60-second reels of, hey, this is why you should invest in my business? Or are you now actually doing the Shark Tank type of, and now that you've grown, that Shark Tank type of a scenario where people are actually coming to you live and pitching their businesses?
A little of both, but on
Oh,
that
okay.
note, can I tell a
Yeah,
funny
sure.
story on
Absolutely.
myself? Okay, speaking of Shark Tank, so one of our favorite investments, it's like having kids though, you're not supposed to have favorites, but is a natural, clean body care brand. So think deodorants, aluminum-free deodorants and stuff, called Curate. Well, she was on Shark Tank, I guess we're coming up on 3 years ago this March. And yeah, I'm a religious watcher of Shark Tank still. Yeah, my family gets annoyed with me because on Friday night they're like, "Mom, business is over. Come play with us or whatever." I'm like, "No, I'm going to watch Shark Tank." No, I really don't brush my kids aside. That made me sound really bad. But it's more my husband who gets annoyed with me. But anyway,
No judgment.
yeah. And so I watched this episode, and this gal was amazing. Her name's Sarah, and she had raised a little bit of money, but more or less bootstrapped. She was profitable, which I don't always see in this space, and her presentation was great. She was a CPA. She used to work in venture, so she knew her numbers really well. She negotiated really well on the spot. So that night, I sent her this long, glowing DM on Instagram, like, "Sarah, you were so amazing. I loved watching you negotiate with the sharks. If you ever, are fundraising anymore, I'd love to visit with you." I mean, it was a long DM. It was a little much, but I was like, okay, good. I've definitely put myself out there. And like on Instagram, you can see if someone's read it.
Yeah.
She left me on red. I think that's
Oh,
what the
yeah,
kids
I
say.
remember you telling me that, yeah.
She left me on red. She didn't reply at all. And I'm sitting there going, what?
Came a little,
And
yeah.
but maybe I was a
A
little
little too strong,
Yeah. And so then it was like almost 2 years later, January of last year, she DM'd me. And she said, "Carrie, first of all, I'm so sorry I didn't reply to you." I'm like, yeah, okay, I'll let it go. I had become a loyal customer of the brand by then. I like the products, and okay, fine, I'll let it go. And she said, "Look, I actually didn't accept the Shark Tank money. If you watch it looks like she took a deal. Mark Cuban's team was really difficult to work with behind the scenes, and so she didn't take any of the money." She said, "And I'm finally, starting to think about fundraising because we're launching in Walmart and then Target right now. Like this week, actually, yesterday there was an article about their big nationwide launch in Target. And it's just so I'm finally starting to think about raising capital, and everyone keeps bringing up your name. And I remembered that's the girl that DM'd me.
Wow.
And so lo and behold, the stars aligned, and we did a deal, and so we're now one of her lead investors. And so anyway,
That's
yeah,
really cool.
you got to get the deal done,
That
right?
is
Like
really
whatever
cool.
it takes, even if it's like putting yourself out there in the DM.
Absolutely.
So.
No, and again, that definitely is something for all of us to take away. It might not happen today.
That's right.
That outreach might not actually convert into something today, but at some point, even 24 months down the line, now they actually feel that there's this sort of an urgency for them to reach back out.
You got to plant those seeds, and you don't
Absolutely.
know when they'll be harvested.
Exactly.
Yeah.
Exactly.
Yeah.
Who else has a question before we wrap up? Okay.
I got a quick question about the 200 requests that you're getting.
Uh-huh.
The company has $2-3 million evaluation. Do you ever find that you're advising those folks after you're meeting with them to go ahead and it might be better to sell rather than reinvest in their company? And what does that look like? And what does that conversation look like?
Or I'm often having the conversation, which is really weird as a venture capitalist, someone, you don't need to raise money. Do not raise money. You don't need to. Or put it off as long as you can. Figure out what you can. Either don't raise money and keep growing it yourself, or look at a sell possibility, right? And so I think that's one reason maybe why we're developing a good reputation, because I really try to have their best interests in mind and not just selfish interest, right? I'm not going to come into a company where the cap table is already so messy that the founder's diluted. In fact, there was a really good deal that I wanted to do. I like the founder, I like the product, but she already raised so much money, she was diluted down to 24% ownership. And it's wait, I'm going to want to come in and take a nice chunk myself too. There's no room for me. I would be harming you to come in and make an investment now. And so, we just try to do the right thing and advise them, as we see as outsiders, what's best for them and their company's long-term success, not just, kind of from our selfish perspective. So it may make us lose some deals in the short term, but hopefully helps in the long term.
Jason Jimenez, I think you had a question.
I did, and from the perspective of the mindset, right? So obviously these are individuals that are creating something. Some of them maybe for the first time, taking them through the process of actually going to market, and there's all these phases of imposter syndrome. Can I do it? Who do I need? How do you support that? What do you, as a firm, do to support that evolution?
Yeah, it's a great question. And frankly, one of the costs I didn't count leading into this was how much everything was going to have to go through me, right? Like with one small fund, you don't have a big budget to build out a big team. So I've tried to be creative in terms of how I've built out resources. And now that we're raising our second fund, we're getting a little bit more room. But so I did take a leap last summer and brought in a guy who I've known for a number of years as my COO. And he's really more of an operations guy. And so what he's really focused on is building out what we're calling the Curate Council, which I mentioned a little bit earlier, is this vetted system of advisors and mentors and whatever. But we've also spent out this time building an ecosystem of resources for our founders. So maybe they need supply chain help. Maybe they need help with their inventory management. Maybe they need help with retail expansion. We've got all these people in our corner that can help them with that. And so while we can't build that out internally like a PE fund might do, we've tried to at least have those tentacles out in the industry and in our network where we've got those warm introductions that we can make to help people, because there's not enough of me to go around, and I certainly don't know everything. And so we've tried to build up that resource base of different expertise, different skill levels, different parts of the business where we've got someone we can plug in for maybe every question or concern that comes up.
Putting in the experts in the right seat.
Yeah, exactly.
Yeah, exactly. I've got time for one last question. Doug Ryan.
Hey, Doug.
What is your average hold period?
Ooh, good question. I think that's another reason, and I failed to mention this earlier, so thank you for teeing it up. I think that's another reason that I like CPG. I think our time frame is shorter, and the capital required for these businesses is shorter than you might see traditionally with tech or whatever. And so, ideally, we'd target a kind of 3 to 5. Realistically, it's maybe more of a 5 to 6, but we're getting close on a couple already. And we just closed our first fund less than 3 years ago. And so, I'm happy to share, because we're in year-end reporting season. We're already marked up at about a 2x on our valuation in less than 3 years, and all that's very rigorously measured and everything. And so I think what's cool about the CPG space is your time frame shorter, less capital is required, and I also think that there's going to be a lower failure rate. Yes, CPG can be challenging in many ways, and we won't minimize that. But I think all in all, it's not like tech VC where you're just betting on one home run and all the others might fail, that power law. That's not exactly what we're modeling. Also, I don't need these companies to be unicorns. I don't need something to have $1 billion exit for it to be profitable for us. If they're not raising very much capital, we can all have very successful outcomes at maybe a 200 or 300 million valuation, or even 100 million in some cases. So there are good outcomes that can happen in relatively short times.
Well, Carrie, thank you so much for being here.
Thank you all.
Can we get an applause for our speaker today?
Thank you.
Thank you so much.
Really good day. Thank you.
All right, Gretchen, you want to close us out?